Hey, Trader Bear back, and today we're going to be going over a simplified way of plotting your support and resistance levels on your chart. Now, if you weren't already familiar with support and resistance are just levels in the markets in which we use to identify the tops and the bottoms of the markets, where we would typically look for either a break or a potential bounce off of that level. The bounce off of support and resistance levels are ideally what it is that you would want to be looking for, and though it really isn't that complicated, it tends to confuse a lot of new traders. So let's get into it. The first thing you're going to want to do is zoom out of your chart as much as you comfortably can. You don't want to make your charts too small to the point where you can't see anything, but you do want to zoom out to see enough on the charts to give you some kind of data of showing you the different areas in which we had reactions in the market. So now that I'm zoomed out, let's start with the highs and the lows of the current market. You're going to want to go to your tools, grab your horizontal line, and you're going to take that and you're going to put it to the highest point of your market, which is going to be our ceiling, aka our resistance. Now, what we like to do is we don't just do a specific price when it comes to resistance. Like most traders, we will mark up a resistance zone, and this will give us more of a clear indication of where that selling zone might be at. Whenever the market makes its way back up to this green box that I have plotted up here, as long as I get my confirmations with whatever strategy it is that I'm trading in this sell zone area, then we know that market has made its way back up to resistance and will more than likely bounce going in the direction that we are looking to trade. Now let's grab some support. Support is going to be the floor of your market. And although technically this would be the lowest point of the market, making it the floor, I'm actually going to go ahead and we're going to put a line over here instead. So the reason why I chose this area as my support instead of this one is because, as we can see, we have way more touches to this area here than we do down here, thus making this a much stronger support level. We have reactions over here, we have a reaction right here, we have reactions over here, and last but not least, over here. So there are multiple reactions at this price point, which tells me that if the market were to make its way back down to that same point, well, then we will more than likely have a reaction at that level as well. Now, you can currently see that there's a reaction going on where the market is at now, and I want you guys to see how simple this actually is. If I were to take another horizontal line and I put it in the middle, exactly where the markets are bouncing at now, if we were to look into the past, you see multiple reactions at that level. So here we have a bounce, over here we have a bounce, over here we have a bounce, here, and aside from all the bounces, we have a break, breaks, multiple breaks, and multiple bounces within this price zone. So again, based on your strategy and what it is that you're looking for in terms of your confirmation, if you were to get your confirmation for a buy at the same time that you were at a level of support, for example, then this would be a strong indication that the markets may bounce off of that support and go in the actual direction that you're looking to trade. If for whatever reason, markets decide to break this support level and start to make its way down a little bit more, then what we would do is we would sit and wait for the markets to make its way down to this support level, and if we get our confirmations for a buy here, then that is where we will go ahead and enter the trade for a buy. So, a quick recap. When plotting your support and your resistance levels, it's always a good idea to start at the highest point and the lowest point of the market, identifying your ceiling and your floor. Now, sometimes you're going to have either a ceiling or a floor where you don't get multiple reactions at that level, and though this might come to play sometime in the future, it's always best to go to the closest zone or area where the markets had multiple reactions to where the markets are currently at. Now, to show you how simple and accurate this actually is, a little while ago, we did a video on our channel, which was the easiest 1-minute binary option strategy, where we taught you guys how to use the stochastic oscillator when waiting for your stochastic cross. If we're looking at the current market and the confirmations that we taught you guys in that video, well, we got our stochastic cross right around this area, as you guys can see, which was a bounce right off of that level of support, and the markets are now shooting up. So if you were to place this trade at the opening of this new candle, you would currently be in profit. Pretty simple, right? Hopefully this video made sense to you, and if it did, make sure you give this video a thumbs up and subscribe if you are not already subscribed, because here at Trader Bear, we are here to help. I'll see you in the next video.